But like I was saying, just watch it. This is why the levels are important, because you're watching it. You know this is a strong support right here. So when you see the stock sell off and then hit this level right here and don't break down and hold the level and then see it start to reverse, that's when you can go ahead and buy in. All right? And let's go ahead and draw a trend line here. So the trend line would look something like that. All right. So you just draw the trend and wait for it to reverse. Once you see it hit that support and bounce, you can, depends on how confident you are, you can buy in at that point. And then look, you could have just swung it right back up here to where you know there's resistance at. So basically, that would be a swing trade. You go ahead and grab some and hold it. Let's zoom in a little bit more so we can get a closer look. So boom, remember that was the consolidation area. Once you see it come down there and hit that support and hold, then look at the next candle. It was basically a battle of the bulls and the bears. That's a doji candle, which means, no one won that battle. It was even. But basically coming off of a downtrend and hitting a support, when you see something like that, you know there's people buying into it because there's a wick on the bottom. There's also a wick on the top. So basically it's neutral, but being that it's coming off of bouncing off of support, I would consider that a bearish, I would consider that a bullish sign because the next candle opened above the low of this one. So it's creating higher lows. Look, a low, a higher low, and then a higher low. When a stock is grinding up and creating higher lows, that's typically a bullish sign. So like I said, people are watching that, they see it come down there and hit that, boom. That could be a time to buy in, go ahead and grab some, and then just swing it on up to here. Now, this was previously a support, and remember what I said, support and resistance are interchangeable. So as you see this going up, this would actually be your first level right here to take some profits. So say you put on the trade here, and you grabbed 1,000 shares. When you bounce up here to this first resistance, you're already in the green. Once you're coming up, and then look, you see this wick here, so you're getting close to resistance. It's rejecting, but then it consolidated a little bit and then continued to trend up. But if you're still holding your full size here at this resistance, I would go ahead and take off half there. Scale out of the position, lock in some profits, pay yourself, and then at that point, you're playing with house money. All right. And then you see it grind up, making higher highs and higher lows. And then you see it hit this directional SMA, the 120-day moving average. Now, it already crossed over the blue moving average, which I typically use that as a signal to either buy in or sell out of a position. So you already see it cross over that moving average and VWAP. VWAP is another important indicator. I'll go over that one on a different video. But look, these are all good signs. Not deprecating factors, but validating factors. So like I said, once you see it cross over your indicator, which in this case, it's a 10-day SMA or simple moving average, this blue line, that's a bullish sign. It's also crossing over VWAP at the same time, which is volume weighted average price. That's a bullish sign. The fact that it came down to the support and then bounced and seems like it was reversing, that's also a bullish sign. And the trend line, you see the trend line that I drew? It also broke that downtrend at the same time. So there's 4 bullish signs and or bullish indicators that support your long thesis at this point. And remember what I said, when you're trading in the stock market, you always have to have an edge, not just one thing. You need to have multiple, not indicators, but multiple just multiple bullish, if you're long biased, multiple bullish factors that kind of supports your plan, your thesis. And that's what you see here. The bounce off the support, the crossover the VWAP, the crossover the moving average, and the break of the downtrend. So at that point, if you didn't grab any here, once you see this, that's 4 or 5 bullish factors to let you know it might be okay to go ahead and take a position. And then look what happened. You could have took the position here and just rode it up here and sold it. So even boom, from here, what's that, about 1775 to 18, like I need glasses. I think my monitor is too far away. All right, but once you see it cross over there, look, that's 1769, even up here to 1932. So 1769 to 1932. That's over $1.50 move. So like I said, 1,000 shares, that's $1,500 right there on the first hour of the market, basically. So, you can be done trading for the day. But like I said, I would go ahead and once I see it hit resistance, I'd take off half. So now we're playing with house money, and then just, watch it. And if you like to use actual stops, just move your stop up. So if it breaks back down, it stops you out of the position. Or you can just use a mental stop and know that, hey, if it breaks down past this level, I'm out. And then you'd go ahead and let it ride. And if you see, there's a lot of selling and buying going on here because it's just a straight wick. And then you see another one. But when you see a stock like moving sideways but making higher highs, that's basically consolidation. And consolidation is typically a bullish sign if it's consolidating on or right above a support. Like I said, once you hit the first resistance, you want to pay yourself, you take profits. But now check it. We're already in bullish territory because we bounced, we crossed over the VWAP, we crossed over the short-term directional SMA, and we broke the downtrend. So we're already got a few bullish signs. Now, if you watch it, now it crosses over the long-term directional SMA line as well. So I also, now I use that as a buy signal as well. So when I see a stock cross over the long-term directional SMA and the short-term, that's usually a sign that it's safe to go ahead and buy into the stock. And boom, what happened right after that? It bounced up, ran up a decent amount, but it hit this resistance. So the rest of my position, I would have gone ahead and got out of right there, or at least maybe took off another quarter of the position. So now, instead of 1,000 shares left, you'd have like 250 to play with. And then you move your stop up. So hit that resistance, sold off. At that point, once I seen it, me personally, once I see it hit this other resistance right here, especially knowing that it's also on a level that was a consolidation level, that's a strong level right there. That's going to act as either support or resistance. In this case, resistance, hit the level, rejected hard, sold off. So once you see that, obviously you want to get out the position, but not necessarily, because if you only have a quarter of your position left, you might want to go ahead and just let it ride out and see what it's going to do, or at least see how it's going to react to the next support that's underneath, which is this one. And look, it did sell off, but when it hit that support held and it grinded a little bit, consolidated, hit that 120, rejected off of it, came back down to the support, then bounced up again. This time, another nice little bounce. That's some good price action to trade off of there. Like we're talking here, look, 1950s or whatever, up to 21.17. So almost $2. That's decent. That's decent price action and volatility. And that's what you want to see as traders, and especially in market conditions like this, where You don't want to be holding on to positions too long unless they're definitely good company that you have a lot of conviction in, and or a blue chip stock that's just down because of market sentiment and or the climate of the market, as in, bearish or bullish. You don't want to be holding positions too long. But because you only have a quarter left and you've already made your money and you're playing with house money, maybe you let it ride and see if it's going to hold that support, which it did. It held the support and then grinded back up, bounced up again. And this time it was able to break above the resistance. Now this resistance becomes support. So now your next area where you're looking to take profits or get out of the position entirely would be this top resistance up here. This resistance looks like it's held up. Hasn't broken through that resistance and held in a while, in at least a week of trading periods. So at that point, you want to go ahead and take your profits and get out.